Good morning, everyone. I'm Vince Lansing. This is the Gold Fix Market Rundown. It's Wednesday, the 6th at 7:38 a.m. There's the homepage, top right-hand side, mining's once in a 50-year opportunity to outshine. We're going to give a little insight into that story. There was a report out by a bullion bank, and that bullion bank had a section about miners, and it was essentially a reiteration and an elaboration on a report they did in March that we covered. And well, they're pounding the table now. And well, we want to cover that because it's in all of our interest. And front and center, August 15th might be key for golden stocks. We want to mention, we believe that Jerome Powell can't even think about cutting right now until he sees the August 15th CPI. And because of that, the market will be whipped by any smaller data that comes out and then be massaged by Fed speakers who are trying to keep a handle on what's going on. All right, let's start with the markets. 10-year yields are 4.23 up 2. The dollar is 98.53 down 22. The dollar is, I think it's the first down day in a while. S&P 500 is 63.13 up 16. The VIX is 17.63 down 21. Gold is 33.66 down 14. It was down as much as 20, I think. Silver is 37.82 up 2.5 cents. It was up about 10 cents at one time. So the divergence continues. Copper 437.80 up 4 cents. It was down last night. Interesting. WTI 66.65 up 94. There you go. Natural gas 294 down 3. Bitcoin 114 spot 300 nowhere. Ethereum 36.23 nowhere. Palladium down 7. Platinum up 7. Gold silver down again. Gold silver now below 90. And so we are now flipping bullish silver versus gold, not just naked long. Okay. Looking at that board, staying with the metals because of how it was so pronounced yesterday, turnaround Tuesday, I think we called it. The trend continues. When silver is up, gold doesn't necessarily have to be up. When silver is up, copper doesn't necessarily have to be up. When silver is up, PGMs don't necessarily have to be up. When PGMs rally and copper rallies, silver gets a little bit more of a boost. Now, that's just the behavior that we're looking at right now. And that's the behavior symptomatic of a market that's en masse, so far orderly, but unwinding a position where they are buying silver and selling everything else that they were long out. How long it'll go on, we don't know. Generally speaking, these things do not end in, I just want to throw a little water on it. Generally speaking, these things do not end in an explosive move in silver. Generally speaking, they end with a spike near the end, but this could be a big one. I'm not really sure. It's not going away. Let's put it that way. Okay, so let's get to the story. Gold mining's unique situation. Mining's once in a 50-year opportunity to outshine. Gold's long-dated pricing has de-anchored from marginal cost, offering producer forward margins of nearly 100%. Paraphrasing something that Citibank said, and they're basically saying that gold miners are a buy. Let's do a little bit more detail on that. In March of this year, Citibank made the fundamental case for mining stocks in a compelling piece that we covered here. Since then, miners have measured, as measured by the GDX, have risen 23%. In June, Citi flipped bearish on bullion, but interestingly, not on miners. This weekend, the bank reasserted their gold bullish stance, and in doing so, made special case to note their mining opinion and updated it. In short, nothing has changed for the worse, except the opportunity. Well, what's changed for the better is the opportunity, according to them, to hedge at even higher prices has grown. Now, gold's long dated pricing has de-anchored, according to the bank, from marginal cost, offering producers forward margins of nearly 100%. Banks that hedge 5 years, we're talking about 5 year hedging now, not necessarily what's going to happen. Unlike oil and copper, where forward curves reflect supply cost, gold structure is driven by low producer hedging and strong central bank demand. Analysts see this as a once in a 50-year gift to lock in future margins. Despite high prices and record cash flow, sector valuations remain depressed, with miners prioritizing buybacks over capex. Caution and capital discipline define this cycle. Always caution and capital discipline. We had the full analysis in a premium post that was just sent out. Mining's once in a 50-year opportunity to outshine. Quick comment. It is extremely true that mining's cost has decoupled. I wouldn't use the word decoupled. That's an urgency word. That's a word to encourage miners to hedge. What I would say is mining's cost has finally gone the other way, because for 10 years, the costs have been inflating. Energy prices, energy costs has been high, right? Uh, DEI, climate change regulations, increased bureaucracy, all those expenses were decoupling the other way. So I would like to say that it's not decoupling, they're just getting a chance to make some money for a change, you know? Um, that's not to say they shouldn't hedge, but it is to say that if you're a mining person, you're probably going to continue to see bigger miners that are more apt to hedge 5 years out in forward contracts, in structured deals with banks, appreciate, because this is how it works. This is reality. I'm a bank. I like your company. I want your company to go up. Whatever reason, we're not doing cynicism here. So I say to you, I want you to spend more money on buying shares back because I'm going to buy shares, and I want you to initiate dividends. And you say, fine, I'll do that, right? That's the advice. And then I say, but I need you to hedge because you have to lock in the flows. Whatever you want to think about, that is what it is. But that's how you run a business. And so the question is, are miners under hedged or not? And I'm developing a strong opinion on what's really going on here. I won't share it right now, except to say that miners probably had very little to hedge between 22 and 24. They probably have some to hedge in 25, and they're being encouraged to lock in further out on the curve because interest rates are high. So if interest rates get knocked down, that'll be a missed opportunity on their part. So there's pros and cons to both sides of this. Anyway, that's the post. Already did that. Already did that. There we go. Related post, founder special. That was the full note being sent out to the founders. GoldFix PM turnaround Tuesday. That's the summary of yesterday's activity. The macro post and Gold City calls for 3,500 by November. You know, a couple people have pointed out to me that it's not really a big bull call, and I agree with you. Their bullion call. What they're really essentially doing is they went from 3,000 to 3,300 to 3,300 to 3,500, 3,600. So they're ratcheting up the trading range is what they're saying. And that means that the hedging might not be as prevalent as they had once thought. Today we have a post. I'm finally going to send this out. It's a post by someone else. I don't have their name handy, but I'll cite them about Mexican silver, and it's a nice little historical piece. So we'll send that out later on today. Data today, Fed speakers, right? So figure out what Fed speakers are going to talk about today. I don't know. They could talk about anything. They could talk about, if the market's lower, they'll say, we're going to cut. If the market's higher, they're going to say, we're worried about inflation, something like that. But that's pretty much how they operate. But none of them matter until August 15th. That's my opinion. Let's look at the markets. Oh, yeah. 33.90 was my target yesterday. We got to 33.89 and change. I will call that victory. Again, turnaround Tuesday. Yesterday's data was, I think, important in terms of stoking fear. Let me go to an hourly here. Scrunch it up. Yesterday's data Well, the rally started at 7 a.m. And that was, I don't know why, but it started rallying. But the rally started at 7 a.m. And look at the rally started at 6 or 7 a.m. here and now. So there is a pattern. The pattern is buy at 7 a.m. Whatever that reason is, it's 2 days. So now we're looking at that pattern being established. Now you look for the pattern to see if it's going to be stronger or weaker going forward. There's my stop level underneath, or my soft stop level. 34.24 is my next level. I'm not confident in that, but um, I am leaving it on the table. Okay, so that's it. The gold market is, I think, nervous. I think you're going to see an increase. I think you're going to see an increase in buying. If I'm wrong, I lose money. Silver, I love silver, right? Especially since the gold silver ratio is now under 90. So if you're long gold and you're a speculator or a short-term trader, you're rolling out of your gold and into silver. Uh, but you have to have a week to 2 weeks time frame here. Not really a lot to add, except there's no data out. Watch the market. Be careful of new lows. If there's a new low in gold after 9:30, I don't think it'll be bought this time, but I hope I'm wrong. I'm Vince. Have a great day.